Today we'll be looking at the earnings from three of my favorite companies, IONQ, Oklo and Howard Hughes. Now I'm filming this from a hotel room in Paris during a holiday trip because nothing will mess with my upload schedule, but you might hear some sirens in the background. So please consider following and subscribing. Let's dive in. Let's start things off with IONQ. IONQ is a quantum computing company. I'm preparing a deep dive on the company, but I'll share you a bit the highlights right here. Quantum computing is very complex. And I believe it's going to be a massive market a bit further down the line, but it might take 5 to 10 years for it to really blow up. IONQ, as it stands today, and as far as I can tell, is really the front runner in the market. What these players are trying to do is to make quantum computers. And the promise of these quantum computers is that they can do computations that would take regular systems or supercomputers of today, sometimes millions of years to do, so it would be impractical for the current systems to do it. They would be able to do it at a fraction of the energy and so a fraction of the cost. Also, the footprint would be dramatically smaller than any type of supercomputer you could use to get even close to it, even though you couldn't get close because it would take millions of years. The name of the game with quantum computing is to get qubits, quantum bits instead of regular bits, integrated in a system and getting them to behave. Getting them to behave means that you minimize the number of errors they generate when doing computations. That they call it the performance. So the goal is to get the performance as high as possible, and IONQ is the highest in the market through their acquisition of Oxford Ionics, a performance score of 99.99%. Then once you get this performance right, to scale the number of qubits that you have in your system. Because the lower your performance, the more qubits you need to do your computations. And here on the right you see their roadmap that they have until 2030. Keep in mind it's a logarithmic scale. To scale up the number of physical qubits, which leads to a number of logical qubits through this error rate, because some of those qubits are then used to compensate for the errors that are made. So today, IONQ they are commercial, they show revenue, they have their systems here. They're currently working on the Tempo system. But they're not just trying to sell these systems, they're really trying to position themselves as the quantum networking company, to deliver all the different elements that are needed in a quantum network, including communication, not just in one location, but also via satellites, and it gets quite interesting. So this company has been at it for a long time. It's been founded by Chris Monroe, who's been doing research for about 25 years and founded the company in 2015. The technology they focus on is trapped ion, as opposed to some other companies, for example D-Wave, which is also an interesting company, focusing more on quantum annealing, which is a subset of the bigger gate models. And so IONQ is really working on a full-blown gate model. So the type of models that can do all these extraordinary computations that people talk about. One final thing that's interesting, so with the way they control their qubits, and that's how they get that high performance score with electric qubit control, that allows them to just use regular chips because they're using electricity, which then allows them to scale up quick through one of those fabless models, so they don't need to build their own factories for that. So overall, a front runner and really exciting company. So the company reported earnings last Wednesday and they showed really nice revenue increase. So about 40 million for the quarter versus 12 the quarter of the previous year. They expect to have about 40 million also for quarter 4. So they completed their acquisition of Oxford Ionics and Vector Atomic. Oxford Ionics are the guys that actually achieved that 99.99% performance. So really high performance means very few errors, which is helpful for scaling. And they announced the creation of Ionic Federal. Seems a bit like a Palantir move, so to meet the increasing demand for quantum advantage across the US and allied governments. So really focusing on government, that's cool to see. And then in the comments from Niccolo De Masi, the CEO and a really impressive guy, we achieved a truly historic milestone by demonstrating the world record of 99.99% performance, underscoring our path to 2 million qubits and 80,000 logical qubits in 2030. What he's saying is that this level of performance will allow them to scale to the number of qubits in their systems that they were thinking of hitting. Because if that performance was lower, they would need even more of these qubits and it would become unmanageable at some point. That's really good progress. And then furthermore, their cash and cash equivalent sits at about 3.5 billion because they did an equity offering. As you can see here, the shares outstanding went up quite a bit lately. They're taking advantage of the increase in share price. Even though the share price went down quite a lot by the carnage that we've had this week and last week, down about 50% I think from their top. This company is starting to get interesting again in terms of valuation. This 3.8 billion sits against a net cash from operating activities, a negative 123 for the quarter. Even if this would be their run rate going forward, they would get to about burning 500 million per year, and they have 3.5 billion in cash. I don't think their plan is to use this cash for the next to fund the next 7 years of operational activities. They have some acquisitions in mind. Let's see how that pans out. Overall, IONQ, I think it's a super interesting company. I'm building my position, but I think we have time because it's quite far out. Certainly now it has taken a dip, and it can be quite interesting. It's a very technical episode this week. The next company is Oklo, nuclear company. I will do a deep dive on them soon, but I'll just give you the headlines here. It was founded in 2013 by Jacob DeWitt, who is currently the CEO, and Caroline Cotrain, who is the Chief Operating Officer, both MIT-trained nuclear engineers. They listed on the stock exchange through a SPAC that was raised by Sam Altman, the CEO of OpenAI. He also was the chairman for quite some years. He recently stepped down as chairman, and I wonder if that's to avoid some future conflicts of interest, which would be interesting because that would mean that OpenAI would partner with them. So let's see what happens there. They did some interesting acquisitions. They acquired Atomic Alchemy, that a company that creates fuel from waste, and they produce isotopes which are used in medical, defense, and industrial applications. So there's some overlap between the technologies. Also, this acquisition would allow them to generate cash a bit earlier than if they would only focus on their core business. Their business model is quite interesting. They build, own, and operate these things, and they basically sell power and heat. So they don't just design these things and have other companies deploy them. They really sell the end product, which is energy and some heat, which is also interesting from a continuous improvement perspective, because now they would have this whole portfolio of powerhouses, as they call them. If they find one improvement somewhere, they can deploy it throughout the whole fleet, improving their cost structure over time. They have quite some government tailwinds. The White House signed an executive order in May to the Department of Energy to tell them to lead the US nuclear renaissance. Energy is a very hot topic because of the AI data center build out and also the reindustrialization of the US. They really want to have more power, and nuclear is a very interesting option. The Department of Energy established a reactor pilot program, 11 grants basically to company, which can help them to fast track their permitting. And Oklo won 3 of these 11 programs. In terms of fuel, they can use different types of fuel, also recycled fuel, which is really interesting. Safety, they have a passive safety system, which means that the reactor shuts down and cools without any human action, electricity, or moving parts. So that's good because people are always freaked out about nuclear. They have some really good connections. The current Secretary of Energy, Chris Wright, used to be on their board and stepped down to become Energy Secretary, and he really has a passion for nuclear. That's a very good connection. The bottom line is that they're very disruptive in terms of their technology. Usual plants cost billions of dollars to make. They are usually 300% over budget and 5 years over their timeline. This is a very interesting option, and they're very well connected to the government, and they have headwinds in terms of the AI build-up. I think they're really well positioned. This company hasn't hit its commercial stage yet. The earnings calls are basically a summary of how the different projects are going. I mentioned in the beginning, they were awarded 3 out of the 11 grants from the Department of Energy to accelerate that nuclear adoption in the US. The first one is for a powerhouse. That's the picture you saw in the previous slide. They have started groundworks on it, as you can see in this picture, but probably this will only be live by the end of 2027 or the beginning of 2028. Revenue will be quite a ways away. The second project is linked to Atomic Alchemy, so that's the company that they acquired. Like I said, this company will generate revenue sooner. This is a pilot plant for radioisotope production that should have its first lab scale production and an early stage revenue within the next 6 to 12 months, and then scale to more commercial revenues after those 12 months. They're working a lot subsequently on getting the fuels they need to run these nuclear facilities. Of course, without the fuel, they cannot produce any energy or heat. They're taking different steps to make sure they have a diverse set of sources and a solid supply chain. One of them is an advanced fuel center in Tennessee, where they, in the first phase, are going to start building a fuel recycling facility that should be ramping up by 2030, quite far in the future. Different partnerships, one that we discussed a couple of weeks ago in one of the weekly, a partnership with Nucleo and Blikala to set up a US fuel fabrication and manufacturing network. And so all this, sure, that chain is solid. In terms of customers, that keeps piling up. Customers contacting them because maybe they want to build a data warehouse and they need a reactor next to it, or military. So that's progressing well. In terms of financials, like I said, no revenue yet. The use in operations is, I think for the full year, is going to be between 65 and 80 million. They have cash and marketable securities of 1.2 billion. They have quite a solid runway. This might pick up, I guess, if they start with their construction. Maybe they also are looking to acquire some. But anyway, in state progressing as they should. The stock is quite expensive. I think really interesting to keep an eye on this company. And so the final company we'll look at is Howard Hughes Holdings. This is basically Bill Ackman's attempt. Bill Ackman is a very famous investor to build the next Berkshire Hathaway. I did a very thorough deep dive on this a couple of weeks ago that you can watch if you want to know all the details. Basically, we're talking about this Howard Hughes Holdings that's owned for 47% by Pershing Square, which is the Bill Ackman's hedge fund. You have the rest, 53%, that's owned by public shareholders, you and I. Under this umbrella, you today have Howard Hughes Communities that we'll talk about, and they're looking to buy an investment company. Subsequently, they'll buy other companies probably. And the reason why they're buying an investment company, I go into a lot of details in the deep dive, so do check it out over there. Next, let's look a bit at that Howard Hughes Communities business. What this company does is that they buy really massive plots of land in locations in the US where people want to live. They sell parts of these plots to developers, and with the revenue they get from that, they build commercial facilities around it. That in turn attracts people, which increases the acre prices, which means they can sell more land again to developers for more money, which they can use to build facilities, and that's sort of an ongoing loop. And so in the end, the result is that you get these really interesting communities to live in with really high land prices that they can charge for it. That's quite an interesting business. And so like any business, they have revenue and they have expenses, and they generate an amount of cash that will be interesting to fuel sort of the efforts they want to do in this diversified holding company. They split it up into rent income that they get from different types of buildings that they own, the land sale that they get from selling land to developers, and finally condo sales. They build buildings and they sell them at some point when they're delivered. That generates cash. And then on the expenses side, they have the cash, general and administrative expenses, not including any shares that they give out, and the interest expenses that they have to service the debt that they used to pay for all of this. Over the long term, they think this will stabilize, or in the coming years, to a cash flow of around 600 million, which can then feed into this effort of the diversified holding company to in turn buy new companies. So let's look at the Q3 results for Howard Hughes Communities. Here I've just split out the picture that we've shown here into the different quarterly cost buckets. And here I've translated that full year picture that they're trying to get to into quarterly revenue and cost targets. Starting with rent, so to get to their longer term model, they would need about 90 of rent per quarter. Currently they do about 70. We can probably expect some increases there. Land sales were 200 million for the quarter, where the long-term average is expected to be at about 110. I expect some fluctuations there, but a really good quarter rather, in Q3. Then in terms of condo sales, they expect an average revenue of about 50 million per quarter. These sales are probably quite fluctuating depending on when these buildings are delivered. You see a really big quarter in Q4, and then a lot of nothing in the other quarters. Probably on average, that's going to average out 50 million per quarter, but it's not going to be smooth. Then for the cost element, interest charges at 50, they are trending at 50. That will probably stay quite stable. Then cash, general and administrative costs about at 20. Here they have a bit of squeezing left to do, but curious to see if that tracks well. That should get them to their real target of generating about 700 million in cash flow per year. Here, this is that same amount, deducting the cost from these revenues, then you get sort of the cash generated. And the cash generated was almost 200 million for the quarter versus the target of 700 per year. This is above that run rate. Of course, there's high land sales and there's no condo sales. Let's see if this stabilizes a bit below 200 million in the coming quarters to reach their 700 million objective. For Q4, they estimate it will be about 85 million in cash generated. Overall tracking nicely, I think, towards that target. And during the call, Bill Ackman also gave a couple of comments about the insurance company they're trying to acquire. They have identified a target and agreed on a price. The due diligence is ongoing and there could be blockers, but he is quite confident it will come through. He hopes to maybe even announce by the end of the year. It will consume most of the cash in Howard Hughes, and when he was pressed by some analysts, explained that it's a diversified insurance platform, different types of insurances. It's not consumer facing, and it has a domestic and an offshore practice. Let's see where this ends. It looks like it can be quite interesting. The stock jumped, I think, about 11% on the earnings. People are quite excited about these developments. That brings us to the end of the video. I really hope you enjoy the content. Please drop me some feedback in case you have some. Like, subscribe, follow, comment, tell a friend. As always, I'm trying to give you really accurate, interesting information, but supplement it with your own research before making an investment call. I will see you in the next one.